Recession fears spark a market plunge, but are we really headed for a recession? So over the weekend, the White House refused to rule out that its trade policies could cause a recession. In reaction, the S&P tumbled almost 3% Monday as recession fears surge. So what's going on? Well, assuming you haven't been living under a rock for the past month, the US's new policy direction, particularly tariffs, has created significant uncertainty for the markets. For the past couple of years, the Fed has been slowly working to bring down post-COVID inflation without destabilizing the economy too much and causing unemployment. In anticipation, markets have optimistically ripped to all-time highs hit just last month. So what drove this? Well, one, investor optimism for a so-called Goldilocks soft landing, which is slowing inflation without leading to a recession. And two, a more favorable business environment. However, the market has tumbled 9% in just a few weeks since. So what's changed? Well, first, the elephant in the room, tariffs. Tariffs are destabilizing the business environment and likely leads to an increase in prices. Investors likely thought the threat of tariffs were just a negotiations tactic and wouldn't actually be acted upon this broadly to create a trade war. Second, the consumer. Consumers have been extremely resilient since COVID, despite a big step up in prices due to inflation. However, that resilient sentiment has significantly deteriorated in the past month, driven by inflation fears from tariffs. And finally, the White House backstop. At the very least, investors were hoping the White House mindset would shift if the economy is impacted and would step in to prevent a recession. However, over the weekend, the White House avoided answering the question of if the US could face a recession. That spooked investors, hence the market tumble Monday. So what now? Are we headed for a recession? Well, we're not guaranteed a recession at this point yet, but getting tipped over towards it. As we said before, we're more bearish near term and likely need to see more stability for markets to regain confidence. Easing up on tariffs could go a long way towards that. Consumer sentiment can be fickle and improve quickly if the negative news cycle fades. However, we haven't seen any indication that this emerging trade war will get resolved soon. So we'll likely have to see how the actual impact plays out. We'll definitely be paying close attention the next few months for consumer sentiment changes, stabilizing jobs, and hopefully minimal inflation growth, starting with the CPI coming this Wednesday.